I'm going to show you how to cut a losing trade early. Now, I just want to point out that this has all got to do with your ego and your ability to cut losses quickly once you're proven wrong. Here we can see a healthy downward trend. So I'm going to show you using the replay tool how you can cut your losses early when you are proven wrong. We will mark our daily lower low point and the most recent lower high. That is our trading range. As trend traders, we will be waiting to enter the sell to see a new lower low. Let's see what happens. Moving your stop to your entry, it has failed to break this low point on 3 occasions. Being emotionally unattached, our antennas are raised. Continued failed breaks. Keeping in mind we already have our lower high marked and lower low. These are our key levels. If price breaks above or below these levels, we have a high probability setup. One of the most major rules of trading a trend is to be aware of major key levels being broken, which means an overall change of direction. We are out of our initial trade. Let's get into another sell because we have not yet broken above this level of structure. Stop above the high, targeting a break. We are starting to see higher lows and higher highs. No major levels are broken. We are going to sell again. Stop loss is tight. We are in profit. Well, we are now out of the trade and we have lost 40 pips. Not too bad. This is a very strong sign of a potential change in direction. Why? Because this current candle has closed bullish above a key level and the most recent lower high, a potential change in direction. Now, because we are unemotionally attached to any direction and the fact that we've had a major break of a key level, we will not be selling. Instead, we will be patient and wait for the next candle closure. Extremely strong sign that price is changing directions. This is why it's important to always use a stop loss. If your ego and your psychology gets the best of you in trading and you don't use a stop loss, you would be in a lot of drawdown. It is much easier to deal with a loss from being stopped out, not using a stop loss, being in much deeper drawdown. We would then be far more attached to that one direction, hoping that it will turn around because we can see a much bigger loss on the screen. To summarize this video, as soon as we see major levels broken and strong candle closures above those major key levels, we must be extremely quick to cut those trades as we are proven wrong, a strong sign of a change of trend. Let's fast forward and see how price reacts above this broken level. And there we have it, folks. It's as simple as that. Knowing when to cut your losses as soon as you're proven wrong, when price breaks major key levels, lower highs, or higher lows. These technical patterns seem extremely simple, but these are the best and strongest cues to exit a losing trade early and when to enter a trade. And having the ability to mentally flow through the market without any bias and attachment. That is the key to cutting your losses early.